Hey traders, Raghi here, and in this recap video for Simpler Futures we are going to cover a number of the symbols that I've had on my watch list, a few of them that triggered entries, and one of them that triggered an exit. So we're going to start with where I took some medicine. And it is an interesting reaction to what we could easily call, for the most part, a risk-off day. The Dow down 167, SPU's down nearly 21. Those are the kind of days you would think, all right, well, wouldn't bonds be up? And yet here we are with a move with bonds selling off on, and this is where I would say, do not lock yourself into correlations. You would think on an risk-off day, gold would be up. So one of the questions I get a lot of is, Raghi, is yen always weak when the equities are up? Or is gold always down when equities are up? Or bonds? Don't put your trades into that always type, assumption. That's the word I'm looking for. So out of bonds, acting out of character, and you definitely want to let go of something if, one, it's broken your validity for the trade, and two, when it's acting out of character. So done with bonds. Let's move on to what else we had going on today. So in the chat room, for those of you that joined me for the live analysis, so this is the second day in a row we were basically playing the intraday NASDAQ. Now let me, rather than talk about the trade, because yesterday we had the break to the upside with a wave reversal, today we had the break to the downside through the wave reversal. 56.46, 56.54 was the zone that we were looking for the rollover from, and that was a support we were looking to break with a negative 100 CCI confirmation. And look, the rest is history. You know what happened after that. But really what I want to backtrack to show you is two things. Number one, on the NAS, we really haven't gone anywhere that dramatically new. It's not like we took yesterday's low and sold off to a brand new low from there. It's not like the entirety of this sell-off is down below 56. I mean, look at that. We take some back, we give it away, we take some back, we give it away, and here we are sitting in a zone of support. So you might say, Raghi, you crazy, you're basically playing chicken with the train. No, let me show you how we're going to do it. And I'll dive into more detail on this in the premium video, but let me just show you guys where these conversations for exhaustion start. We started our analysis before the sell-off based upon the halfway mark, based upon the halfway mark of this range. Think of it as the 50% of the chop. So that, coupled with the 200 period simple moving average and the fact that the market really didn't find enough momentum to break the 5,800 major psychological level, made it look like, not to mention the previous two high zones, made it look like this might be a good place to look for exhaustion. But I won't step out in front of the train here. I won't step out in front of resistance like that, because that really is basically hoping for exhaustion, in essence picking a top. Oftentimes we're better off to leave a few points on the table and let the market roll over and prove to us that weakness is actually creating that bearish momentum. In comes the 30-minute wave reversal. And yes, sure, I probably left about 30 points on the table by not shorting that 57.70, 57.80 area and waiting for 57.50, even 57.45 to break. But what I have here is, rather than shorting a ceiling or rather than shorting exhaustion, I'm shorting into bearish momentum. It's a cleaner type of confirmation. And also think about your nature, your preference for entries. A lot of people would rather sell a breakthrough support than sell a test of resistance. They're both sells, right? They're both shorts, but one is expecting exhaustion and the other one is showing you that the market is punching down to lower lows. All right, let me run through a few more setups that we have. The Nikkei. The Nikkei and the NASDAQ are typically where we have been spending the most time in the room. So what is up with the NASDAQ? I'm sorry, what is up with the Nikkei? Take a look here. On the 26th, we grabbed a 995 and took it long up to this zone here with an initial profit target at 20,245. I've had a lot of coffee today. Sorry about that, gang. So basically, by saying the refire is okay, that is a sign to the traders saying, look, if we can get back down to 19,995, we can get long again. So we have gotten long again once more. What's the upside target? You guessed it, 20,245. So there's a trade setup that I'm watching and am in right now. That is the long on the Nikkei. And again, take a peek at the overall trend. I'm not looking to pick a top here, gang. I'm looking to buy pullbacks without any expectation of the market making a higher high, just for me to get the follow through that I need. Notice we're stepping out in front of any kind of higher high. If we do punch up to a higher high, great. That's just gravy. All right, couple other symbols. Let's go to coffee. We have just shorted coffee. We've been waiting and waiting and waiting for coffee to come to us. When I talk about parking an order and waiting, I mean it. You know, we've been talking about coffee for 3 sessions now as we're waiting for the market to tag 27.45 or 27.70. And today we finally got it. So we are short within the context of coffee's downtrend from this zone. Finally, soybeans. Well, not finally. I got one more symbol to show you. Soybeans, we've been waiting for that 931.5 level. Again, overall downtrend. Take advantage of the correction. The market exhausted into this zone where I'm looking for a sell-off. We made a high of 936. 936. Shorted 931.5. And actually, you know, 931.5 was probably more aggressive than I may have needed to be, because really 934.5 would have been fine. So did I leave about 3 points on the table there? Yeah, I did, and that's okay. It's inside my zone, but it's not as conservative as I could have been. So 931.5 and 934.5 were good, solid levels to look for exhaustion. Last update here, natty gas. Natty gas. We talked about natty gas or UNG ETF. This one here, again, our last symbol for our recap video. This was a 3.115 short sell. We waited for this one. The narrative here is a very interesting one. Narrative is not the sole reason ever for a trade, but it is a reason to look at the underlying psychology that could be propelling a market one way or the other. With NAFTA in Mexico back in the conversation, and a lot of people don't know that the U.S. supplies Mexico with a lot of natty gas, and a quarter of Mexico's electricity relies on natural gas. So if we're maybe seeing that NAFTA conversation erode, that means that a huge demand, a huge buyer of U.S. natty gas, that relationship could be falling apart. That would then really just continue to emphasize shorting into rallies to the upside. We took the previous high, middle line of the wave, and that's where we got that 3115. We've already hit the initial profit target at 3055, and now we're waiting for the next profit target at 3.005. This is on a $2,100 contract, already a $600 return per contract for the NG futures contract, okay? And that is it. I believe something else on my radar might be sugar, also related to the Mexico story. So I'll be keeping an eye on sugar. And we saw the move that we had on SB. Let me pull that up there. Okay, so I'm looking at this move on SB. It hasn't quite reached a level that I would like to sell it from yet, but we will be keeping an eye on sugar going into the end of the week. All right, that is tonight's recap video on what we have going on over at Simpler Futures. See you in the next update.